This is Hey Eric with HeyEric.com and Black Realty Group, and it's podcast 32, and we got some great news. Inflation dropped to 3%. Can you believe that? The Fed released those numbers last week, and everyone got excited. The market is still rallying. Earnings season coming out. Stock market's doing great, up, and up. It seems to be some of those big tech stocks. If you have AI in your name, things are going well for you. But real estate, it's still moving also. So with that inflation cooling, we know that the Fed's probably going to slow down interest rate hikes. After they released that data, it sounded like, they skipped it last month. They might do one more. Everyone's forecasting that they're probably going to start adjusting downward early next spring. So that's where things are at with interest rates. A few transactions I recently saw, homeowner got just under 7%. I think it was 6 5/8 or 6 7/8 for an interest rate. They did get a 2-1 buy down. So, for that first year, it's discounted by 2%. So it's really 4 5/8. And I bet you they're going to be able to refinance in a year because A, interest rates will have dropped, and B, they'll have additional equity in their home. But doing a market update today, things are still similar to last month. We're going to look at numbers for June 2023 compared to June 2022. And I also pulled up June 2019 numbers because I wanted to see, what's an average sales like in June over the last couple of years, pre-pandemic, before things got crazy or before things really slowed down because of interest rates. So let's dive in. So looking at total sales, they're actually down 20%, 22%. Last year, they're about 3,300 for June along the Wasatch Front. This year, they're at 2,600. So quite a slowdown, and we know why that's happening. It's because interest rates are high. So it's slowing buyers down, some of them. It's definitely slowing down sellers because they're not going to move just to get a higher interest rate. So people aren't listing unless they need to list. And I've mentioned that before. That's just the fact of it. Until things adjust a little bit, we're going to have this, slower sales, fewer listings, etc. List price. So median list price this year is $510. Median list price last year was $528,000. That's a decrease of 3%. Sold price this year, $500,000 median across the Wasatch Front. Last year was $530. So that's 6% decrease. So that's part of that compression that we've been talking about in prices. It's not some fall in prices, but it's a compression because rates are higher for longer than we want. And so it's not that it's going to continue to happen, but I'd say we're going to settle in there until, rates flatten or start going down a little bit. Days on market, last year they were really low at 8 days on market. This year they're at 21 days on market. So they've definitely increased, but they've come down since last December when they were up at around 55 median days on market. When interest rates were and when inflation was the highest, interest rates were still unknown. So people really took a pause last December. One thing to note is that last year in June of 2022, that list price and that sold price were almost identical. So that's kind of the inflection point, I think, of when, as rates started to rise, people stopped, bidding up properties and they started just paying what they're listed at. Because before that, we would see always the sold price above the list price. And right now, depending on the price point, we're still seeing that, but things are sitting a little bit longer. So I'd say last year was that inflection point as people started the sales market slowed down a little because rates were starting to increase. About months on supply, we have just under 2 months of supply of homes on the market. So that's still technically a seller's market. We jumped above that 2 months ago, but it's still floating around 2 months. We usually, the lowest we ever get, even during the pandemic, was just over a month of supply of homes. Comparing, like I mentioned earlier, 2019, total sales that month, June 2019, was 3,885. And every June since, we're always between 3,300 and 4,000 sales in a typical June. And this year we're at 26. So that's definitely a decrease. And that's, interest rates, fewer listings, etc. It's all the same things. It's just different ways to look at it and analyze it. But overall, our market's still healthy. I actually had a friend call me yesterday with a referral for someone who's moving from Texas to Utah. And he was absolutely surprised that our days on market were sitting around 20. You can't believe that. But it's because Utah is still a great market. We still have a housing shortage. People are still moving here for jobs. We have a great economy. And so, while interest rates are high, while prices are what they are, it's still a reasonable time to get a home, because there's going to be that future appreciation because people are still coming and things are still happening. So, but with the inflation numbers being 3%, it looks like, Mr. Jerome Powell is going to get his soft landing he's been talking about. I'm pretty confident that things are going to go pretty well. There's some skeptical people thinking that, there's still going to be some sort of recession in Q4. Only time will tell. And I just hope it doesn't. But if you have any questions about real estate, you want to talk about the economy, hit me up, heyeric.com. You can give me a call, 801-660-9173. And thanks for joining me today.